Good morning and welcome. Patriot Radio News Hour. Joe and Jason here on this Tuesday. This is it. It's the last day of January the 31st. The Fed meeting has started. Yes, they pulled up in their executive cars, and I'm sure they had a nice spread out there waiting for them as they sit around the conference table thinking about, hey, how many more lies do you think we can tell on the American public so they think that inflation isn't so bad? But we'll get the big news, the rate hike news that will come tomorrow. Earnings season continues. We had a decent number from General Motors. Unfortunately, margins are getting a little squeezed. And now with Tesla lowering the prices for all their electric vehicles. I know Ford has followed suit. I'm assuming GM is next. Expect more of that. UPS, not very good numbers out of them. A bunch of more tech company layoffs. I won't get into it. Most of these companies we probably never heard of, but the layoffs in tech continue. But Jason, all eyes on the Fed as they're waiting for tomorrow. Right now, the expectation is a quarter-point rate hike with some, I guess we'll call it tough talk.
Yeah, I think that's where they'll go, Joe. It looks like a quarter point. We've been discussing for the last 6 weeks if it was going to be a quarter point or a half point. I think we both bounced around a little bit because a lot can happen in 6 weeks. So we'll get this one done by tomorrow, and then we'll be talking about the next one because obviously, you know what if they surprise us, Joe, and they raise them 3 or 4 more times this year? Wouldn't that be a surprise? But it just doesn't point that direction, does it?
Well, you know what? I'll say this. The market doesn't want that. That there's no doubt about it. Jim Chanos, he's one of these big short seller guys. You'll see him on the TV. He's a billionaire. I mean, he's a guy you got to pay attention to. And he's like, hey, I've been around since the 80s. I've never seen such a thing happening where Wall Street and the markets are not listening to the central bank. Because, you know, the central bank's been saying higher for longer all year. Well, really starting last year, higher for longer. The markets don't believe that. He's really concerned about the market. He thinks the bond market, which, let's face it, bond yields have collapsed over the last 60 days, which is kind of weird since they've been raising rates. Right now, the 10-year note at 3.52. And by tomorrow, we're going to have a Fed funds rate of like 4.6, you know, which is if they go a quarter of a point, if they go a half point, it'd be even higher than that. But he's saying that is over. Now, falling bond yields would be good for bond investors. He thinks that's over. He thinks Wall Street is way overpriced. And he says no one's paying attention to earnings. And I really thought, Jason, they would, because everybody is slashing guidance for what they think is going to happen in 2023. But to give perspective, Chanos was throwing out S&P numbers between 1,800 and 2,200. Jason, that's 40 or 50% lower than right now. I mean, I don't know, right? None of us know, but he makes an interesting point saying that, hey, the guidance doesn't warrant this price. And oh, by the way, the only reason that he thinks it's this high is because you've had bond yields collapse.
Yeah, Joe, and we were looking at gold and silver today being down a little bit. Now it's up. Right when we got on the air, it started going up. So I don't see any of these numbers getting better. There's nothing but, you know, these numbers have nothing but downward pressure. You know, it's going to get worse. So we'll see what happens tomorrow. I mean, I get the feeling if the quarter point happens, I think the markets will actually be happy about it, Joe. I don't see things going down tomorrow. I think there's a big push to get these markets to be higher and higher, because I think when this recession really gets going this year, then we're going to see the numbers come down, and then there'll be a lot of sell-off. I mean, the difference between now and 2008 is that back in 2008, there was, I think, more smaller companies and smaller owners of these stocks. But now, Joe, I mean, it's really consolidated under bigger hands. So I don't know how big a crash can be unless the big players want to sell their piece, Joe.
Yeah, and yesterday we had Joey on, and I apologize on our YouTube. We had a when we try new things, usually, unfortunately for us, the first time's usually a disaster. We had something happen that honestly, true story. It's never happened before, and why it happened yesterday we're looking into. But listen, I'm telling you, you got 401ks, IRAs. You need to be with somebody that can help you get right here. Do not take major loss. You don't have to. That's ridiculous. And then again, Joey was telling us yesterday, hey, after this, after he thinks a big pullback's going to come. He goes, then we need to readjust your portfolio and get ready for the next, up leg, if you will. So having that in place, reach out to him, 602-909-9048. And hopefully next Monday, we'll have him available on our YouTube channel as well, Jason.
Yeah. We're going to keep on working on it, and we want to improve this. Even if you're one of those guys that are watching the show, eventually we're going to improve what you're seeing here and improve what we're doing. Joe and I haven't gotten used to. There's a lot of things going on. Let's just say that there's a lot of things going on.
A lot of things going on is absolutely right. When we get back, a market update. And just like we thought, it's kind of interesting. Gold usually goes down on Fed meetings. Maybe this one's different. We'll be right back. (800-951-0592). Joe and Jason, Patriot Radio News Hour, and a quick market update. Gold up 5 right now, 1928. Gold last night while you were sleeping, and some of you, maybe if you're an early riser, gold was down almost $20 this morning. It's come all the way back, up 5 right now. Silver, same thing. Silver's had like an 80-cent swing today. Silver's now up almost 10 cents here, 23.85. The Dow is higher, not a lot, but just under 100 points. The S&P, the Nasdaq, the bond yields again a little lower today. Yesterday got the 355, 352 on bond yields. But this market update brought to you by our friends at YRefi. Right, another great place to go. If you don't want to be involved in the carnage that a lot of people think is coming. Again, I don't know, right? Jason doesn't know how high are interest rates going to go. Is inflation really over? Jason and I doubt it, but is it? Is it not? Is it really higher for longer? Are they going to go back and bring rates back to zero and start quantitative easing? We don't know. But now with YRefi, there's a great way to get really, really good returns, up to 10.25%. I mean, think about it. You're talking over 50% in 5 years. Who wouldn't want to take advantage of that? And it has nothing to do with Wall Street. You got to have 50,000. That's the big key. You got to have at least 50,000. But again, now you can use existing IRAs. Some of you, and I don't know all the details. I'm trying to get more, but certain 401ks, you can use that as well. Check them out. Call them up. Get on the list. Find out more. Invest, YRefi.com. The word invest, the letter Y, REF, Y.com. Or just call them up. 888-YRefi24, 888-YRefi24. And Jason, just to wrap up what Chanos was saying, he's like, hey, this doesn't make any sense. Just the earnings of what is supposed to come. It means lower prices, but Wall Street seemingly released. But hey, this is what Wall Street does, right? The price is what the price is at that exact moment. But again, just setting people up, because a lot of people, me included, I really thought Wall Street would continue to fall in January. It didn't. Kind of hung in there, gave a little head fake. I think gave people some hope that maybe things aren't going to be so bad. And then, Jason, you know what usually happens? That's usually when they crush them.
Yeah, it's the markets are essentially the same ever since Biden took office in January, and it has nothing to do with Biden. It's just whatever reason the markets froze there. It goes down a little bit, it goes up a little bit, it goes up a little bit, it goes down a little bit. It's very controlled, Joe. It's very, very controlled. And when you look at every single company out there owned by essentially the same 10 companies, and the top 3 being State Street, Vanguard, and BlackRock, they own, you see company after company after company owned by these huge titans of industry. Whether those stocks go up or down, Joe, has a lot to do with simply just those companies and their stake. They can make the markets crash at any time they want, Joe. I mean, think about those 3 companies. If they own, I think it's 30% of Coca-Cola. If they simply sold their stake, Coca-Cola goes down hard that day. So, Joe, it just feels like we are being led down a path where they want the markets to go when they want them to go. Because, I mean, I've never seen, looking at the markets, you have the Dow around 33,000. That's kind of where it was in January of 2021. The S&P is around 4,000. That's where it was in 2021. I think the NASDAQ was a little bit higher. The tech stocks are a little weaker over the 2 years, but essentially the same spot, Joe. So they're making decisions just like the Fed. The Fed makes the decisions. How much are we going to print? Where are the interest rates going to go? When are they going to go up? How much are they going to go up? This is not what a private company is supposed to be doing, controlling a sovereign government's money supply. And when people understand that, Joe, then everything you report, Joe brings all the facts and figures, the known news. All we can do is try to read the tea leaves of their rigged game. And then that helps you when to buy gold, when to not buy gold, when to buy into YRefi, all these other options that are out there to try to not be susceptible to a market crashing at any moment, Joe. And doesn't it feel that way, Joe, that we're waiting around. It's like it's like I've never been to the Super Bowl, but I'll bet the build up before the actual kickoff probably takes 3 or 4 hours. Probably sitting there forever trying to figure out when the game's going to start, right?
Yeah, if you didn't know any better, right, you'd be like, what's taking so long, right? And then it's all day long, and then it finally happens. I don't know what it's going to be. I truly don't. I don't know what the catalyst is going to be. But when it happens, and this has kind of been the pattern, especially later in these boom and bust cycles that we're getting from the central bank in Wall Street. As these bubbles get bigger, it seems like it takes a while. We're not sure what the catalyst is. And then when it really bursts, it bursts hard. And that's when people are off guard. And people got to remember, listen, the rules have changed. And I want to keep reiterating this. The rules have changed since the last bubble bursting, right? Go back to 07, 08 during the last bubble. We know about the bank accounts. I've told you about that. But the rules have changed for your 401ks. The rules have changed for your IRAs. The rules have changed for your money market accounts. The rules have changed for all you day traders out there, or you casual guys out there that, I like to buy stocks on my own. Those brokerage accounts, Jason, all the rules have changed there. And most people, they're too dumb. They don't want to believe it. They think it won't happen, and they're not prepared. And that's exactly how they want you to be. There's no going to the sidelines this time. Right? All of a sudden, you wake up in the morning and Jim Cramer's out there saying they know nothing, and he's freaking out, and the Dow's down 2,000-3,000 points, and you're in there, you're like, that's it. And you got your cup of coffee, you still got your boxers on, You run into your room and you get on your laptop and you're hitting the sell button on your E-Trade account. And guess what? It's saying denied, 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 denied. Just like ask all the guys from Blackstone trying to get out of the REITs right now. And Blackstone's, oh, no, we're limiting that. Now, guess what? The SEC, at any point, they can declare, you know what, this is an emergency. You're not allowed to sell. Remember the financial crisis. Really, the first big sign before Lehman was the money market accounts. People are trying to go to the sidelines. Jason, there's no going to the sidelines. And that's why you have to have the right amount of gold and silver put away, because they're going to block it.
Actually, and I did this, it's been a couple of years, maybe a year and a half since I did a report, but all stocks are actually owned by one company, Joe. Do you know that all of them? And I think it was the DTC or the DTCC. I'll get that. I'll get the information out on the break, but there's essentially one company that actually holds all of it. Remember how you had stocks, there would actually be a paper pass between buyers and sellers, or you'd actually have the floor where people were passing the buy and sells, right? They eliminated all that with a digital system, and there's essentially one clearing company that holds all of it. So if that company simply says, our computers don't like what's going on, we need, how many times have we heard that the plunge protection, right? That's the DTCC.
Right. Plunge protection team. Listen, we've seen it in a bunch of markets. The nickel market comes to mind, right? Where all of a sudden, it just happened last week as an example. The NASDAQ had a problem, and they just decided, well, these trades don't count, but these trades do. When it really hits the fan, they're going to block you from getting out. That's what part of the rule change was. This was part of the SEC's rule changes when it comes to investing. And you know what's so funny, Jason? That just tells you you're dealing with the rigged system. It's okay. We'll allow you to win. You're never going to win as much as you think you should, but we're going to allow you to win. But guess what? We're definitely not going to allow us to lose, right? You're going to sit there at that craps table until it comes up 7. Bottom line. And Jason, it's all legal.
It's all legal. It's all baked into the cake, so to speak. It's the rules are rigged in one direction, Joe. And if you're not one of those guys that sit on those high shares of power that buy and sell as you please and decide which companies will succeed and which companies will fail, then you've got to play a guessing game. You got to figure out what to do with your money, when to do it with your money, and you got to be able to do it when you can, because just as Joe said, at any time they can freeze an asset and you have no access. Those stories you're talking about, Joe, pretty soon with digital money, they'll be able to do that with your accounts. You won't even have the ability to have physical cash to move outside of that. And so this is why we do what we do, Joe. That's why we talk.
Half-empty cup. You guys are going to want to tune in there. We're going to play a piece from Glenn Beck. We're going to be talking about what's on the World Economic Forum's website and what they're planning to do with digital currencies and smart cities, and what you're going to be able to buy and what you're not going to be able to buy. And Jason, it's right out there in black and white for people to see. And I don't know when it's going to be. Jason doesn't know when it's going to be. Mm-hmm. But just think between now and 2025. So you got 2023, 2024. Here comes 2025. The debt's going to be, I don't know, over 40 trillion. Most people don't know we're in the debt ceiling debacle right now. We're under emergency measures. But even without that, do you know that the Treasury was slated? It's right on their own website. They were slated to borrow in the first quarter. That's January through March, which would be the second quarter for the government. $932 billion in 90 days. It's $1 trillion, just under $1 trillion. By the way, that's $253 billion more than they had projected 90 days earlier.
Wow. Those are big numbers, Joe. Those are huge numbers. People don't realize they throw that trillion number around like it's, that's just common speak. It's a number that's so unfathomably big, Joe. And the way they throw these numbers around. And here's the thing. It's fake. It's phony. The whole thing is fake and phony. It's you know what? It's all about faith, right, Joe? How much faith that people have in the system? And I think the only reason there's faith is because people don't want to be bothered with it. They've been trained to think, this is too big brain for me. I'll just hand my money over to my 401k and then I'll be fine, right, Joe?
Yeah, we got people out there. I got an email, a customer talking about, well, what if they confiscate gold again? Well, let's look at that, right? Let's just say it's 2025 and it's here and we've got the digital money. Everybody, it's a mess. And we're talking about, the government allegedly says they've got 8,000 metric tons. That's our official position. We don't know. Most of it, if we're led to believe, is from the gold that got melted down when they confiscated it in 1933. And allegedly, it's not even in delivery bar form. But let's just say they do. But let's give some perspective on that. What would that look like? Jason and we're going to talk about that when we get back. (800-951-0592) Joe and Jason, Patriot Radio News Hour. We got an email from a customer. You guys can always email us, whether you want to use the radio station's email, 1360khnc.com, hit the contact button. Go to Patriot, hit the contact button. My email address, if you want to email me directly, double J. So the word double, got to spell out double, the letter J, double J, at allamericangold.com. And we'll definitely try to answer any questions you may have. But the question was worried about gold confiscation. Obviously, in 1933, the gold was money. So, when they took the gold away from the citizenry, obviously that really changed and gave a lot of power to the bankers. And then, of course, when Nixon closed the gold window in 1971, really gave them ultimate power, we thought. But guess what, Jason? We were wrong. Digital currency gives them real, true, ultimate power. But nonetheless, as we were talking about before the break, we've got about 8,000 metric tons. We started talking about 2025. I don't know what the debt's going to be, but it'll be north of 40 trillion. It'll be north of 40 trillion. Got to factor in the Fed's balance sheet. Let's just say it's, I'll be kind because I think it'll be higher than this, 10 trillion. So let's call it 50 trillion, somewhere between 50 to 60 trillion dollars of national debt. We've got these 8,000 metric tons of gold, allegedly. And let's just say with the digital currency, people don't have faith. They want it backed by something. And our government decides we're going to back it with gold. Well, obviously, 8,000 tons of gold with a debt of 50 to 60 trillion dollars puts gold at the stratosphere type levels. But just to give people some things, there was one type of gold you could own after 1933, and just one. So it was illegal to own gold in the United States from 1933 to the early 70s, with the exception you could have jewelry. So a jeweler, he could buy gold. You could buy it in jewelry form if you desire. An artist, I'm going to do, I don't know, a sculpture or what have you, and I want to put some gold plating on it. He could get some gold. A dentist, well, I'm going to have a gold tooth or something like that. But other than that, you couldn't own it. It wasn't allowed. We didn't mint any gold after that point, all the way up till 1986. But Jason, they always left the loophole, which is what they do, which was anything that was considered to be a collectible gold coin. You can keep that. So maybe it was a gold coin from California or New York, or maybe a Roman gold coin, something that they viewed as a collectible you could keep. So if you were rich and you bought a lot of collectible gold coins, you got to keep it all. And then, of course, 90 days, right? 90 days later, they took the price of gold from $20 to $35.
Yep.
So we don't mint any. We decide that we want to mint gold again. Ronald Reagan's president. They make the Gold Eagle Act. And in that Gold Eagle Act, they said, hey, any pre-1933 U.S. gold that's still in existence, because remember, the vast majority of that got melted down, and that's what is allegedly sitting in Fort Knox. Any pre-1933 U.S. gold that is still in existence, we now consider to be a collectible gold coin, period. Doesn't put any other stipulation on it. Doesn't, have to say it's got to be this grade or that grade or anything else. If it exists, it's pre-1933. And there's another caveat, and it's U.S. minted. It is considered a collectible. All other forms of gold for investment purposes, i.e. bars, coins, foreign, domestic, is considered to be bullion, which is what they confiscated in 33. Part of the reason why we like pre-33 gold, just in case they want to confiscate gold again in this country. Now, they can confiscate it for two reasons. Number one, hey, we need more gold because we're going to back our digital currency with gold. Well, let's look at that for a minute. The U.S. Mint has been minting gold coins since 1986. On average, it's just an average, they mint about 10 tons of gold a year, give or take. Well, over a 37-year period, right? Well, that's only 370 tons of gold if they took it all back. Now, let's go crazy and say, you know what? Let's just double it in case I'm off a little bit. Let's double it. All right, it's 20 metric tons. You're still going to get less than 1,000 metric tons. Now, you got all the foreign gold, all you guys out there buying Maple Leafs or Krugerrands. You got the bars, right, that we're not counting. So let's double that. So you got about 20. Maybe, Jason, you end up with 700 to another 1,000 metric tons. I don't think you're going to get 8,000 tons as an example. I don't think that's why they'll confiscate it. I actually think what they'll confiscate it for is because 90 days later or 180 days later, we're going to change the price of gold from, and let's just say it's at 4,000 in 2025. We're going to change the price of gold from 4,000 to 10,000 or 20,000. And we don't want you to get that return. We need that return to help us with all the debts that we have and make it look like we have enough gold. I think that's why they'll confiscate, Jason.
Well, we're going to hit the break here in a second, so I have a few things to add, but we'll hit it on the other side because I got a few things to add because there's a lot of things.
Jason's going to chime in on the other side, but a great question from one of our listeners. We'll be back after the break.
Welcome back. Half empty cup of Joe.
That's not yet. That's in like 20 minutes.
That's not yet.
I do that all
That's
the
coming
time.
out
I'm
20
on the
minutes.
half empty cup. I'll say it's Patriot.
Absolutely. Well, Joe, you bring in almost every segment on the Patriot show, so I do bring in some of the breaks on half empty. But no, this is the Patriot Trade News Hour, and we're talking about gold confiscation. And Joe did a good job of stating all the facts of what happened before and what could happen now. I don't think gold confiscation is going to happen, especially with digital currency. And there's one major reason. And before I get to that, let me go back to the original gold confiscation. It was $10,000 fine or 10 years in prison if you dealt with gold after that law was passed. And believe it or not, there's not even a known. I think there might be one case or maybe two cases on the books where somebody actually was prosecuted for gold buying or selling. The reason for the confiscation, the biggest reason is gold was a competing money versus the new Federal Reserve System, which was in place for about 20 years. And the banks will obey the law. Remember, institutions, corporations, most individuals will go by the law. So when they made gold confiscation, the banks immediately turned everything in. Now, the individual might have kept their gold, but the banks, the monster load of the gold was immediately turned in. And that got rid of the competition. And then we moved through the Depression into World War II. This time, Joe, I don't know if they need gold confiscation. This digital money system is going to open up so many avenues of tyranny against the people that the buying and selling of gold could be just heavily taxed. Every ounce of gold that you admit that you're buying or selling could be taxed heavily, Joe.
It'll all depend. I think this is just my opinion. I don't know that there's enough gold in the hands of the U.S. citizenry to make it worth it. Right? Like I said, I don't think they're going to come up with 8,000 tons. Matter of fact, I think they'd be hard pressed to get 1,000 tons. Now, one thing I also, by the way, I want to make this clear. The only gold I can't put into an IRA, I can put a gold eagle, I can put a buffalo, I can put a maple leaf, a Krugerrand. Heck, I can put a Chinese panda. I can put a gold bar in there. Guess what you can't put in there? Only one thing. Pre-1933 U.S. minted gold. So, but to Jason's point, I don't think that's why. However, I do believe that if it's necessary to quote unquote restall confidence, to maybe take a debt and let's just say $60 trillion. Hey, we're going to reassert our gold. We're going to reprice our gold to make this number look better. And right now, I did napkin math. I may have screwed it up. And I will check my math. And if I've screwed it up, I'll come out tomorrow or the next day and give you the right number. But I think right now, at 8,000 metric tons, and if the debt was $50 trillion, gold would have to be like $190,000 an ounce. Now, they don't need to have it be 1 for 1, right? They could just say, hey, we got gold holdings of 10 trillion or 20 trillion, so the debt's not as bad, what have you. I do think if there's going to be a major revaluation of gold in the U.S. gold holdings so they can make the balance sheet better, there will absolutely be a gold confiscation. They're not going to allow you to have gold at $4,000 and then overnight, all of a sudden, your gold is now $100,000. Jason, that's just not, they're not going to allow that.
Yeah, but like I said, I don't know if they need to confiscate it. Just like a lot of the government would like to confiscate guns, it's an impossible task.
But they would. I believe they would. Joe, in this scenario, they would need to confiscate it because people got it in their IRAs.
Well, that
now again, they could also tax. They could also come out and tax it 80%. Hey, you get a one-time capital gains tax of 80%. But you're right. They don't necessarily have to confiscate it. They could also resolve it with a tax issue.
Well, if they want to connect gold to the debt, and they may not do that, Joe. They may not want so much attention being sent to gold. But I'm telling you, with a digital currency, they can say, hey, once again, it goes back to how much freedom can you afford? You go to Warriors Revolution to buy a firearm, and now there's the digital tax on the gun. That's on top of, hey, I got a firearm, I'm selling you for $1,000. Hey, by the way, there's another $1,000 tax on it. That's a great way to stop people from buying guns. I think gold, and that'd be unfortunate for us, Joe, and unfortunate for a lot of people. You admit that you're buying and selling gold. There's going to be the good list of stuff that maybe you don't get taxed on, and there's a bad list: gold, guns, things like that, where cigarettes. You're going to get taxed heavily on this stuff. If you want to be free, you have to pay for it, Joe.
I'm going to tell you this: tune into the Half Empty Cup because we're going to play some Glenn Beck. Really interesting what the World Economic Forum has, and it's available. Anybody can read it. It's right out there in the open. This isn't conspiracy theory. This is fact. And I agree. I think it depends. I don't know that it's likely, but I don't know what it's going to look like. The only reason I could see it happening is because they want to use gold as a way of saying, hey, it's okay that we have these enormous debts and we're going to revalue. Because right now, the government still has gold valued at $42. I mean, so revaluing it at 10,000, 20,000, 100,000, I just don't see them allowing the American public. That's why I say buy pre-33 U.S. gold, period. Just in case, because that's a whole different classification. Now, could they loop that in? Yep. They could, right? We're not saying that it's the cure-all, but it is a different classification.
Well, one last thing, Joe. If they put a big 50% tax on gold, or you could just bring it into the government, and we'll just take that piece out. You won't have to pay it if you bring it to us, right? There's ways to get it, Joe. There's ways to manipulate it.
Our final segment coming up. 800-951-0592. Patriot Radio News Hour. Joe and Jason. Final segment here, Jason. Gold's still up 5. Well, 480 right now, 1928. Silver's up 5 cents, 23.80. The Dow is off. It's up 50 points. The Nasdaq's up 26. I'm sorry, the S&P's up 26. The Nasdaq's up 100. Tomorrow's the big day. We don't know what's going to happen. We think, pretty sure, it's a quarter point with maybe some tough talk. I based on what gold's doing here, there's a good chance, and especially if the talk isn't that tough, we could see gold rallying as another stair step down on interest rates. Today is the last day on $20 gold at 21 1/4. And then, Jason, we'll see what happens, tomorrow into Thursday, because historically, usually when you have the Fed meetings, right, the Fed's raising rates, that's strong dollar stuff. And normally on Fed meetings, gold falls. But we saw in December when they went from 75 to 50, gold rallied. And now they're saying it's going to be 50 to 25 tomorrow and into Thursday, because by the time we'll be off the air tomorrow, before the rate hike happens, it can be I think it's going to be a very interesting market late on Wednesday and into Thursday.
Yeah, I think that's right. And so our Thursday show could be an interesting one. Tomorrow we'll see what kind of pre-announcement market moves there will be. But I think, Joe, it's going to stay pretty calm all the way through to the weekend, especially if it's a 25-point rate hike. Because everyone's expecting it. Everyone's been ready for it. They've been rate hiking ever since the beginning of last year. So if it's 25 points, Joe, I see things kind of running kind of sideways smooth a little longer.
Yeah, so keep your ears out. 800-951-0592. We'll see what happens. Again, I think it's going to be more about the message than the rate hike. But again, the central bank's been trying to convince everybody higher for longer. I don't know that the message is going to matter tomorrow. I really don't. And Jay Powell's been known to screw it up from time to time. And if he lets any inclination at all about a pause or hey, we're going to be ending rate hikes soon, then Jason will be wrong and gold's going to move aggressively to the upside. No doubt about it. If there's any talk of that, in other words, it's not quite tough talk, and then he makes whether it's a slip or he wants that out there that they're getting ready to pause, we could see a much higher gold price. If that happens, and the conversely, let's be fair. Let's say they went 50 basis points, which nobody thinks, we'd probably see a much lower price.
Yeah, and I think the markets would react very badly to 50 points. I still think it's a possibility, but we'll talk more in the next hour because World Economic Forum, that some of these bigger players outside of the Fed, or I guess talking directly to the Fed, I think there's some crazy things getting ready to happen. And the calm before the storm, I think, is actually, believe it or not, has been the last 2 years. And look what gold has done while it's been calm. So we'll keep watching it, Joe. But yeah, these rate hikes will stop. They have to have their stopping of it. They got to see what all of these hikes did, because everything lags behind, Joe. Right? The results aren't when they raise the rates. It's like a year later, right?
Yeah, I mean, let's face it. They're still saying year over year, homes are still more expensive year over year. It's going to take a while for it all to work through. Patriot Radio News Hour, Joe and Jason, 2125 on 20s today at 800-951-0592. Join us for the half empty cup.